Good morning, distinguished ladies and gentlemen. I see the point that Carl was trying to make about the lights. It's quite bright. But let me please stand on all the protocols that have already been established this morning. And very quickly, maybe just start by first and foremost appreciating MTN, really for all that MTN continues to do. For example, today MTN, depending on what day you look at the markets, is either the second or the third largest listed company on the exchange today. This is under 4 or 5 years of being listed. MTN perhaps is one of the most diversified stock holdings that we have as far as just the retail breakdown and the broadness of the shareholding structure. Also, as we'll see during the presentation, a lot of the innovation that our market has recently witnessed has really been tied to MTN. And perhaps on a bit of a more personal note, the recently retired chairman of NGX, Mr. A.B. Mahmood, is also a strong stakeholder of the exchange, is a director here. So no surprises that when MTN calls, I jump out of bed and really am all ears. Welcome again this morning. And my job really is to speak for what is about 10 to 15 minutes about the Nigerian capital markets, essentially to what I plan to do is walk you through 3 broad areas. My view is that a lot of the people in the room, particularly for whom this event was themed, the foreign investors perhaps haven't really looked at Nigeria in very recent times for understandable reasons. So I hope that by the time that you are done, at least you get a good sense for the current state of the capital markets in Nigeria, and you can at least leave with some data as to what the current state of the markets in Nigeria is. Also to some of the asset classes that we have. Many people think it's just equities that we trade in Nigeria. I would look to address that. Of course, I'll speak to some of the challenges that we face. The challenges I think are very well known. I will not spend too much time on that, and I would look to talk primarily on solutions. Hopefully by the time I'm done, you get a sense for why I am personally excited about things that are currently happening in Nigeria, I think just like the previous speaker just spoke to. So talking about the current state of the markets, what I will do is just go through about 4 or 5 of the asset classes that we do business with in Nigeria. First and foremost on the equity side of things, a few key data points here. As you would see here, the average traded value of securities today stands roughly about $9 million, about $10 million. And a big chunk of that is by local investors, which I think is quite remarkable. Many of us always had fears. If you go back about 5 years ago during the markets, you would have thought and you would have found that at least 50-60% at some point of the trading on the exchange was by foreign investors. And there always had been this fear: what happens if these investors leave Nigeria? It's interesting to see that today foreign investor participation stands at about 10%. And what we found is that a lot of the institutional funds have stepped in, they've invested quite aggressively. You'd also see there on the left portion of this chart that year on year, that figure, at least in naira terms, continues to grow. Market capitalization is just about $40 to $50 billion, again, depending on what exchange rates that you use. And you see there what the index performance has been in local currency terms. Of course, by the time you translate this into USD, you get a slightly different picture. But at least nonetheless, this is what the face of the equity side of our capital market looks like today. On the chart on the right, you would find that from a year-to-date perspective, Nigeria continues to outperform most major indices and most major benchmarks. I try to show here also on the equity side of things, it's important to realize that of this roughly $40–50 billion worth of market cap that I said the equity market is currently today, easily 15% of that market cap has just been added in the last 2 years or so. And so you'd understand why I was thanking AB just earlier. You've seen a lot of what I would call good quality listings on the exchange in the last 2 years. If you go back maybe 4 years then and you capture the MTN listing, which happened, I think, first listed by introduction in 2019, then very easily about 20% of today's current market capitalization is new on the exchange. Now, this point is important. It's important because there's a lot of talk, of course, rightly so, about delistings on our markets, and that is true. And in that sense, Nigeria is no different from most major exchanges. If you go to Johannesburg, for example, where I'm sure many of the investors here have flown in from, you would find that there's a very constant trend of delistings from the exchange. This is a trend that most exchanges are seeing. You're seeing capital reverse from public markets into private markets, particularly smaller companies. And so what most exchanges do is to make sure you're replacing those delistings faster than you're losing. So for example, on Nigeria, the other data point I think you can leave with is that the aggregate size of delistings we've had in the last 2-3 years is under 0.3 trillion naira. All right, and you compare that with what looks like about easily 5 trillion naira worth of new listings in the past couple of years. What has drove those listings? MTN I spoke about. Bua Foods was a very good listing for us. This happened last year, early last year. Geregu is another power listing also that occurred very recently on the exchange. It's the first generation power company listed on the exchange. This year we've had 3 outstanding listings. We've had VFD Group lists. We've had Mikio listing, which happened fairly recently. And a very interesting one is the one in the middle there at the top, is the Nigeria Infrastructure Debt Fund. This is a fund sponsored by one of our intermediaries, Chapel Hill Denham, and it's the first investment trust listed on our market. If you're familiar with those, if you're in London, for example, easily 1/3 of the listings in London are driven by investment trusts. And this, I think, as we'll see subsequently, I think will drive a lot of the growth on the exchange. Otherwise, on the left there is the historical performance of the all-share index. We are multi-year highs today, which I think is also quite remarkable, of course, also in local currency terms. So much for the equity market. On the debt side, you have here also a very quick snapshot of the state of the debt capital markets. Today, the outstanding market cap of debt instruments, of the debt stock, is just about the same size as the equity debt stock at about 39 trillion, which is again a $40-50 billion market cap. At the bottom right there is the turnover, which you see is about 100 times the turnover of the equity market, which I think is in line with global norms. But it's also been a remarkable, I would say, journey on the debt side also fairly recently. You see on the left side there, the year-on-year increase in government bond issuance is very strong, you know, and the double digits. We've also seen very strong commercial paper issuances as well locally, and very strong corporate bond issuances. You see Dangote Cement issued a bond fairly recently, the largest single bond listing also in the face of capital markets. Away from that, 3 other asset classes here also that are traded relatively newly on our market: ETFs, derivatives, and commodities. I've just tried to gather some data here from a few other exchanges, including our exchange at NGX. And some of the key takeaway here, at least first and foremost, is that there's a derivatives market in Nigeria now. We launched the index futures on the equity side. So the all-share index, we have a derivative or a future on that. We launched that last year. Today there is a bond futures also traded on another exchange in Nigeria. You would also be familiar with the OTC FX futures. The outstanding figure today is about $2.75 billion worth of those inflows into that market this year. And I think also that dispels some of the myth as to the fact that there actually is FX that flows still into Nigeria, which that captures. Finally, on this slide, on the commodity side, the bottom 2 figures there give you just a very rough sense, very small figures relatively speaking, but at least you're seeing increasingly the capital markets try to address the subject of commodities. How do you get more physical storage for commodities? How do you get them to sort of trade better? Now let me move to the second part of this talk, as I said, which is the challenges that face the capital markets. Many of the things here we are familiar with, and we could spend the next 2-3 hours, as with anything Nigeria, to talk about the challenges and the problems. But very quickly, 4 of them are listed here. The first is, of course, liquidity. Many of you who sit here, who trade Nigeria currently or in the past, are familiar that a $10 million a day figure is quite low. There was a time in the history of our market that we traded $100 million daily. And so this remains, I would say, a big bottleneck for particularly many of the foreign investors who prefer, ideally would like a lot more flow as they bring capital and put capital to work. The second thing is, you know, the investor base. The foreign investors, as I said earlier, have gone from about 50-60% to now 10% share of market. That is a bit concerning, and as we'll also see shortly, the retail segment of our market remains to be unlocked. The third thing here is the types of products on our exchange. Yes, as I mentioned earlier, there are quite a few things now that we've launched in the capital markets, but you would argue that the depth and the variety of these products also we could do with a bit more enhancing around. And then finally, regulatory and policy holdbacks. I will not spend too much time on that because I am regulated myself, so let's just keep through that very quickly. On to the more exciting stuff, where I talk about the opportunities that face the markets, and this is really what gets me very excited. I have here what I call a long list of about 8 opportunities, but I'll spend the rest of the talk on 3 of them, 3 that I think over the next couple of years or so, as we all plug into this renewed hope agenda, I really think would drive and deepen the capital markets in Nigeria quite remarkably. But before I get into the 3 of them, let me just touch on 1 or 2 ideas here that you can just take home with you. One of the ideas here is the Elite Network. That's the figure there at the far right of this. It's a product similar to what you have on the London Stock Exchange, where you argue that to drive small, companies and their listings on the exchange, you need to be very familiar very quickly with the fact that they need typically a segregated kind of rules. They need a bit more hand holding. So think of this like an incubator of sorts for smaller companies, smaller size companies, where you can help them to reduce unit economics on things like their auditing, their governance, their legal type requirements, and you handhold them over a couple of years until they're ready for a listing. One other point there is around partnerships. How do we deepen partnerships? How do we form deeper partnerships? We're looking at partnerships today, for example, with DFIs, local DFIs. If you issue debts and bonds to companies in Nigeria, one of the arguments that we're making is that listed companies, of course, are more transparent, they're better governed. The odds of recovering your capital when they're listed is that much higher. So forming the right partnerships with some of these DFIs. And then the third point I'll speak on here before I then go to the other 3 ideas is technology. We've spoken about this quite a bit. One of the other things that has happened in our market in the last 2 years or so is the launch of a technology board. We've launched this board understanding that a lot of the technology capital raise that we are seeing is happening outside the capital markets. And why is that the case? It's frankly because the capital markets are not quite set up to capture them yet. And so this technology board that would also be looking to deepen over the course of the next few years is our attempt at addressing and driving that. All right, so 3 things that I would talk on that, as I said, over the next 12 months, 2 years, if we were to gather together again, what are the core 3 things that we're trying to track at the exchange that we really think can deepen the capital markets? The first of them, and dare I say, the most critical, is what we've called advocacy. One of the things that you would find is that the capital markets that we have today are only what they are because of deliberate, conscious government policy. And we really couldn't stress this point enough. 1972, for those who are familiar locally, there was the indigenization decree. This was a decree, well, some people would argue was the right thing, some people would argue was the wrong thing, so that's not really what we're debating today, but it was a decree. And this decree essentially tried to get more local ownership and local participation from foreign companies. This singular act took by 10 times the number of listed corporates on the exchange. It went from about 8-9 companies to 82 companies in the space of a few years. And that's what led to many of the foreign national companies that you're trading on the exchange today. It was this decree and it was this act. Without that, many of the companies we have today will not be on the exchange. A second example of this is the financial sector reforms. In 2004, again, those who are familiar with the Nigerian capital markets understand what happened here. Increased capital requirements by the banks, by the regulator, drove many of them to the capital markets. Today, the financial sector and the banks represent 60% of the daily trading on the exchange today. But for a reform like this, the market will be materially different from what we have today. I speak here also about the pension reform, the Pension Act, a big government policy in 2004 that, of course, changed the face of the pension system in Nigeria. The big point to take away from this is that, but for an act like this, the depth that we have in our capital markets will not be there. I spoke earlier as to how pension funds today easily account for maybe 80% of the trading that we have on our local capital markets today because of some of these reforms. And then finally here, I speak about another big government advocacy and policy effort, which is the NCDMB. This was an attempt to try to add more local content into the oil and gas sector. Today, arguably one of the top 5, top 6 companies on the exchange is alive because of a policy like this. Seplat represents, for example, today, what was another big piece of innovation on our markets, a tie between Lagos and London. We saw a dual listing of a local indigenous company because of support of a policy like this. So the point I try to make here is that the singular biggest thing that can be done to change the face of the capital markets is not investment bankers wearing suits and knocking on the doors of companies for the next listing, or perhaps, you know, all of these things that we do, but really intentionality around advocacy. At the bottom here, I list a few things that are food for thought that also will be keeping us busy at the exchange on this subject. The first one there is PCCL, and it's short form for a bill that in 2004 made it to second reading in Nigeria. That's the Private Companies Conversion and Listing Bill. Very, very, very contentious bill, I have to say, way before my time. But this was a bill that tried to argue that if a company in Nigeria operating at a certain scale, at a certain level of turnover, at a certain level of bottom line, then you should look to convert to a public company and list on the exchange. Imagine what a bill like that would do to the face of the exchange today as we have it. Quite material. Several other ideas here. We talk about a dual listing requirement. Today, you find this trend where many companies leave the shores of Nigeria to list abroad. That is good. We welcome that. However, when you go to many jurisdictions, one of the requirements that they add is that if you're listed abroad, you give local investors an opportunity to invest as well. Particularly when our pension funds, for example, typically only invest in local currency. A bill like that or an advocacy effort like that also has the potential to change the face of the capital markets quite materially. So many other ideas here. We talk about USD dividend payments. There's certain laws that we have that do not allow you, if you are earning dollars, to distribute those dollars to local investors in Nigeria. You have to convert that into Naira. It remains a disincentive for listing. But the examples are quite myriad. Imagine today if somebody said that to lift crude in Nigeria, we encourage you to be a listed company. And that's not a bad thing to do, because listed companies, as I said, are more transparent, they're better governed, and hold themselves to much higher standards. That would change things quite materially. So the first thing here is that advocacy is one key way to deepen our capital markets. A lot of work has been done on this. For those who are familiar with our markets, there is the CAMIC and the CMC that is sponsored and headlined by the apex regulator, the SEC. And what we'll be looking to do is to continue to help to deepen and to drive that further. The second of three, and this is what really, really excites me and what has really, I would say, attached us to MTN at the hip, is what I call digital transformation. And we've made quite a lot of progress on this. I should add that in 2021, November, we had the secondary share sale of MTN. And this is what I was speaking to earlier as the one singular thing that has changed the face of the capital markets. One of the things that hampers retail investing in our markets is the fact that retail investors can't meet the capital markets on this device just yet. Unlike the banks, a lot of the innovation and the depth you've seen in the financial markets is because on this phone right here, I can be connected into the financial markets in the space of minutes. The capital markets are different. The closest we ever got to in our market was during this MTN share sale, where in that primary offer, thanks to the support of MTN and some of their advisors, notably Chapel Hill, we were able to have investors invest in that offering, whether you were a new investor in Nigeria, whether you're an existing investor. In 2-3 minutes, you were able to invest, and some of the results we have here, 150,000 new retail investors, for example, a lot of those were women, and it really, as I said, changed what was the face of investing in our capital markets. So the big question is, How can we deepen this market from a sort of digital transformation perspective because of some of the benefits here that I think are quite obvious? How do we take what we did on primary markets to something that's a bit deeper on the secondary market side of things? So that, for example, if, as we are here, we get information that by the time we're done in this meeting, someone says, I would really love to buy some MTN shares. Why should it take you 2 days or 3 days to get that sort of exposure that you would like to MTN? The way to address that and to solve that is through a digital transformation. I'll just pause for a few seconds to welcome His Royal Highness.
We would like to welcome His Highness Khalifa Muhammad Sanusi II, CON, the 14th Emir of Kano. Your Eminence, you're welcome.
Okay, thank you. Okay, thank you. So as I look to round this up, if there was anything I left you with is to say that we are doing quite a bit to get the capital market onto a mobile device. One such initiative actually we'll be announcing this morning, which is the first ever use of USSD in our capital markets. It's a partnership and it's a brainchild of work we've done with MTN. If you have an MTN phone today, if you dial this short code 5474 hash, it just opens up a new gateway of capital market data and information for you, and we'll be looking to deepen a lot more of that. Finally, as to the three things that I spoke about is what I call products. We're looking to launch in the next couple of years maximum, certainly any time from now, a few more key products that we think speak to what the retail investors are looking for. Today you have under 250,000 retail investors in Nigeria. As bad as that sounds like opportunity to me in a country of 200 million people. How do you get those people to the capital market? It's through the digital transformation. And when you've opened up the markets through transformation, is to get the right sorts of products. Depository receipts. How can I, as a local investor in Nigeria, use Naira to gain exposure to securities abroad? Investment trust, I spoke to that earlier. How do we deepen and transform infrastructure, for example, in our country? It's through things like investment trust. And then, of course, digital securities, which I think is the language and is the norm that many of the retail investors are looking to consume today. So as I close, it's just really to leave you with this, to say that the markets, in my mind, are poised, I think, for a very significant transformation in line with the agenda of government that we see today. To do that, we continue to work on key partnerships, of which MTN, of course, remains a strong partner. And I think with your permission, before we take Q&A, I understand that there's a video to play for 30 seconds on this USSD launch that we are doing with MTN today.
You talked about challenges, you talked about opportunities. What is Exchange doing about sustainability?
Thank you very much. Sustainability is a key topic for us. First and foremost, of course, because there's a lot of capital globally that is available for sustainability. So it's important that we make ourselves available and ready for such capital. On the secondary side of things, we launched green bonds in Nigeria on the capital market. So today, many of our corporates have issued and continue to issue green bonds. We have specific guidelines around that. Also, more importantly, one of the things that we're looking to do is to launch a sustainability framework. We're going to be working with many of our listed corporates to say that rather than talk about a net zero in Nigeria, which we think is too early a conversation, the ideal conversation should be around what is your current carbon footprint, Where are you trying to get that to? And then the exchange works with you around a framework to try to address that. We think that that forces better behavior from our listed corporates, and not just them, also a lot of the companies that are plugged to them in their ecosystem, in their supply chain. We're looking to launch a program that tends to hold everybody accountable for that. And then I'd say finally, back to partnerships. Today, the Luxembourg Stock Exchange is the most reputable exchange when it comes to sustainability. Before my time, there was a partnership that was signed and launched with them, which has been quite useful in positioning our markets properly, but we're looking to also leverage on that and to do a bit more of that.
Thank you very much. Do you have anybody in the audience? Yeah. Okay, please.
The name is Nona Au. And I want to thank Timmy for his presentation. However, I think that there are areas that you should be interested in. I'm happy you closed on the note of partnership and advocacy. First, CAC and NGX need to do much more in terms of the number of companies that can get listed. It is not sufficient for you to wait for a bill if the law says that if I am going to sell my shares in a company that is not listed, I need to have CAC's buy-in. I think what you should be doing with CAC is to say, if you are going to do this transaction, that transaction must come on an exchange. That way our market will be deeper, because currently there is concentration risk. And then you talk about company leaving, delisting. I also think that in that regard, the minorities themselves need to be better protected, because if you don't protect them and they don't trust your platform, then you are not likely to have people bring money when the market will be needing money. The other aspect that I think that you haven't talked around and talk about has to do with cost. Yes, I know that cost of running government itself is a challenge, which the speaker before you probably didn't have opportunity to talk about. What is the cost of me having to be an investor on a Nigerian market vis-a-vis the other markets? So it's also important that you sit with your regulator. Governance is not first about collecting all the money. Government is first about providing platform. And once you provide the platform, then the money will flow in. But the manner in which we are going now is money first, and any other thing can go and wait. Let me close my remark and question on the issue that, again, the first speaker, probably because of time. For every business, just like marriage, there will be dispute. How long does it take a dispute on the market to get results? I've seen instances of over 10 years and the market still hasn't resolved them. Fortunately, because government came in, Owando will resolve in how many years? And that is not good for any market. And I'm sure that is not what you want to copy. Let's also hope that the issue of security, because each time we talk about government supporting the private sector, if I start a pharmaceutical firm today, I'm going to import largely over 60% of what I need, active ingredients. And we're talking about petrochemical, and emphasis on petrochemical is being much more on diesel and petrol. So in engaging government, let's also see how we can push that position so that all of us can be in a win-win situation. I want to thank MTN for this focus. Thank you very much.
All right, we have less than 40 seconds, but we'll take the second question and then we'll wrap up from there.
Okay, thank you. Barbara Barungi, Imara Africa Consulting. I'd just like some clarification. Are foreigners allowed to invest in all listed companies and in MTN Nigeria in particular?
Thank you very much. Let me start with the second question because it's the easiest to answer. And the answer is yes. Foreigners are allowed to invest in all listed companies. And of course, as with any market, you need to do that with and through an intermediary, of which we have several in this room. But yes, you can invest in all listed securities, including MTN. Let me go to Mr. Awo's questions. Thank you, Mr. Awo. Of course, it's always good to hear from you, as I know you're quite passionate about the market, and thank you for all that you do for the market. I would speak more first to the cost of trading, because I take the other ones you mentioned more as takeaways. You talked about minorities and protecting them around delistings. This is a subject that's very, very top of mind for us. There's quite a bit that we've done around many of the delistings that we have heard about publicly, and in fact, if you look, you'd see that one or two that were announced all of a sudden look like they may reverse their decision. A lot of that is because of some of the work that we do, but I do agree that there's quite more protection that we need to give to them. Let me speak quickly to, of course, the demutualization of the exchange that has occurred. One of the things that drove the demutualization and the current structure that we have today is to actually just strengthen this regulation, which also is where the linkage with investor protection sits. And so for those who are not aware, today we have what I would call a world-class regulation business that's standalone, completely independent and arm's length from the rest of the exchange, really to make sure that governance, regulation, investor protection, and many of these things that they would coordinate with other sectors of our market are done. And I take your points as a takeaway to continue to deepen that. As to the cost of trading, I agree with you. I couldn't agree more. Because today, if you were to trade in Nigeria and trade out, let's assume you saw an opportunity and very quickly you want to do a buy and a sell, it would cost you about 2.something% to do that. That is very, very high on any metric and any standard that you look at that from. One of the things that we're trying to do, and I say that some of our intermediaries are here, so I want to be careful how I say this, but is really to force down a few of those costs. We find that a big part of them is the cost for brokerage. Technology will significantly help us to address that. If you look at many other markets, there are many digital platforms that allow you to trade for free at a zero cost. Today, there's still people that charge 130 basis points as brokerage to allow you to do business. We think that with a lot more technology and digital sort of transformation, that should be addressed. Of course, there are costs that we charge also as a business, as an exchange. In a world now where we're set up for profit, there's that tension. But I can tell you that a lot of our stakeholders are looking at this deeply to say, just as you said, should we take a bit of a longer term view on this, relax some of those costs, and find a way to build a market if that helps. The other things that bring cost, of course, are things like even bringing deals and issuances to the markets. A lot of the feedback we've gotten is that it's quite expensive to do that, especially when you compare it to raising money from a bank by way of a loan, for example. What I would just say is that some of these things can happen faster than others, but it's a subject matter that remains, I would say, front and center on our mind. The final thing that you mentioned, sir, was around CAC. How do we make it easier for people who want to exit? If these stocks are not necessarily listed on a public exchange like ours, can we work with CAC to just find a way to mandate that at least let that process be done on an exchange? I totally agree. We're looking to do that, not actually just with equity. There are many other parts of the Nigerian capital markets and perhaps even financial markets that if you look at today tend to happen OTC. And one of the things that we're trying to do is to work with the right regulators and agencies. Say, look, let's try and push a bit more of those things. Not that they shouldn't happen, but that they should happen in a bit more transparent manner. This is how markets develop anyways in the first place. I think it's a good time to stop. Thank you very much.
The online people will be angry if you stop. But can you, in 1 minute, answer this? This person is talking about the downgrading of Nigeria from frontier to unclassified. So, what's the comment on that?
Okay, thank you very much. So, I think this is another subject that, of course, gathered a lot of headlines, but then the reality and the impact is slightly more nuanced. Of course, for those who are not familiar, at the heart of it, when you say that Nigeria is in a frontier index, it means that Nigeria is one constituent of several other countries on an index that in this case is Morgan Stanley. So, for example, some of the foreign investors in this room might be what we call passive investors. Somebody might give them $100 million to manage and tell them to track the Frontier Index. So their job really is just to take that $100 million and invest it in this proportion. So of course, if your country is in that index, it's a positive and a benefit because then capital flows to you. So in this case, Nigeria was on this index, the Frontier Index, and we've just been removed from that index into what they've called a standalone index. So naturally, the first thing is that if capital was to flow into that index, Nigeria would not be at least a natural recipient of that capital. Or there's some people that would have been invested in that index, and because they're bound to be invested like the constituents of the index, then have to sell those constituents of Nigeria out, which also is not a positive. But in reality, like we had said before, the share of foreign investors in our market already is so small, 10%. In fact, in some instances, 5%, such that the real, call it short-term impact is not as the headlines would have suggested. A lot of that capital had flowed out already, naturally. Now, number two, I think what that also shows is the impact of what I call the macro on what we do in capital markets. You can't really disconnect the markets from what happens at the big picture, big level of things. We're very optimistic. If you look at a lot of the engagements that I think the government has been doing, that the exchange also has been doing, you would find that we've been quite active at trying to support the government's efforts, trying to get in front of investors at events like things like this that we're doing today. We're hoping that as the FX situation improves, because that was the material driver behind this downgrading and the removal, is that as you know that changes, people who are familiar with capital markets knows that things happen cyclically. You go to countries across the world. Argentina is my favorite example. 1 minute it looks like the world is over for Argentina because they defaulted and the markets don't like them anymore. The next minute another cycle shows up and they're the darling of investors. So I think what this really tells us is that we've got to just fix things locally, and once we do that, I think the capital flows back and many of these indices we get added back on as we've seen in the past. Thank you.
Thank you very much. Thank you very much. Let's appreciate him.